Hi, and welcome to another episode of Nursing Your Way to Wealth, where a mental health nurse and an accountant talk about wealth creation, personal development, and financial independence in the UK to help you live the life you deserve.
Hi everybody, and yes, today we're going to be discussing quite an interesting topic, and that is of whether you should, when it comes to your investments, you may have seen the on your social feeds or you see them glorified in the films, the guys picking the shares, making millions of pounds in really short space of time, gambling on individual shares, or do you take a more passive approach and invest in index funds, betting on the total market or investing in the total market as opposed to trying to cherry pick the shares? So it's a quite a core question, and I think there's a few different factors to it, and I don't think there's probably a nice happy medium solution to incorporating some of this kind of active investing if you were kind of are really keen on it. But I think we're just going to discuss the relative merits of whether you should go stock picking or whether you should just invest in index funds or the bits in between. And I think we can cover things like, can you hold on to your emotions? How much time do you actually have to invest and do the research? And also an interesting bet that Warren Buffett placed with several unnamed hedge fund managers around the performance. So we can get onto that shortly. But I guess to kick off, Alex, I'd be keen to know, I know we've talked before about, we both are big proponents of index investing, but have you bought individual shares before? Yeah, what are your views on it? Maybe do that to kick us off.
Hi, and thanks for the intro, just to save me from doing the majority of them. So, I have never bought an individual share or anything like that. I just began in 2019, just putting some spare cash I had into index funds. I've never been one for but buying a particular share in a company and then waiting to see if it goes up or down, or really committing to do the research that it takes to get those decisions to land favorably for you. And I think that I'm not smart enough to do that. I don't have the time to put in to do that. And we certainly hear an awful lot about the traders that make a lot of money, the people who buy certain shares at X price and sell them a couple of years later for many multiples of that. But I feel like a lot of those are just survivorship bias. People don't tell you about the times they lose. We've covered loss aversion, that we feel that more strongly than we do any wins. So I think people are much more likely to tell you about a success story because it makes them feel happy and it becomes a good story, rather than, oh, I lost this much money on a punt of a bet that I made, or I did the research. I felt like this company was a good company at a fair price. I bought it, held it for this long, and yeah, it just didn't work out. So I think you're less likely to hear of it. And my father actually told me a story once of him buying shares in a certain English company. To my knowledge, he paid a particular amount. It's now worth a lot less, and he's just sitting on them and just holding them in the hope that they will eventually go back up and cut his losses. But he's not prepared to cut and run at this point. So I think they're worth so little that there's literally no point in cashing them in. It's probably not even enough to buy you a lunch at a half decent restaurant at this point.
Yeah, that's interesting. I think that point around you only ever see the successes is really relevant. And I mean, personally, I started investing quite young, and it very much was trying to do the stock picking. And I've gone through a journey, I guess, over the last probably like 15 years, to be honest, of starting off trying to look at the penny shares, trying to get rich quick. And I think one thing to be aware of when you are buying individual companies is the cost that you actually pay to buy a share, and it can be a lot more than you think. And so for when I first started, albeit this was quite a long time ago, I thought I'd literally watched Wall Street, I'd watched Boiler Room, and thought, oh, could definitely, I want to get rich quick. I'm going to find some penny shares and buy them. But you pay a fair amount of commission. So I mean, I was paying nearly £10 per trade just for the privilege of buying the share. There is then you'll see a buy and a sell price. So that's what they call the spread. And the big companies that you might see on, like, say, the FTSE 100, they have what they call quite like thin spread. So there'll be a small price difference between the two. But as you start going down the kind of the size of company that you're buying into, the spread gets a lot larger. And so the way it works is you will be buying at a loss already. So it'll be a price higher than what is trading at the market. And when I first started, I would say investing, say like 100 to 150 pounds in a particular share, and already losing, say, 15 pounds in. I'd be 15 pounds down as soon as I bought it. Um, I didn't have over the long term. I think I had one success, but so on a percentage wise was pretty good, but not on yeah, material wise, and I ended up losing overall. So that's where I kind of started, and then I went. This was pre-university for me. I then went to obviously university, got a job, then started investing in a pension and index funds pretty quick after starting my job, and that's been a huge benefit to me. The thing is, I'm still really fascinated by investing. I really like it, and I love the theories. And certainly over probably the past couple of years, I've started to. I'm a avid reader, certainly of like the method of value investing, so similar to the technique Warren Buffett looks at. And I think the way I run my own money now is 95% of my net worth, when it comes to my portfolio, sorry, is all in index funds. So broad based, they track an index, don't have to worry about it. I do have a small percentage of my portfolio in individual companies, but I take real pleasure in researching the companies. So I am an accountant. I can read the balance sheets and I understand the cash flow forecasts and I understand, the financial statements, and I enjoy reading the trading updates. And I think where I've got to is I really quite like being a shareholder in these companies. And I look at it as I'm not buying a share for the short term. It's very much if I could, I'd buy the whole business. I've got I think I'm a few £1 billion short of doing that at the minute, but but I just enjoy that. And I know, look, I'm not going to get rich from this, but it's not going to bankrupt me either. So I have a bit of the balance, and that's kind of like this satellite and core um, method of managing a portfolio. But yeah, that said, I dedicate a lot of my reading time outside of work is spent on investing, and I just find it really fascinating. So that for me works, but I've gone through the whole cycle of trying to be a trader with you know getting influenced by television, to a nice long period of really investing in index funds, to a bit more of a measured way of still having some of that excitement of looking at shares and being a shareholder and a business owner from that standpoint, um, of individual companies, without it having any real. There's no risk, but even now, there's probably not enough time. I wouldn't be willing to dedicate. Well, I don't have the time because I have a job to dedicate to actively manage and have all of my money in individual shares. So I've kind of gone through that. That's been my journey with it. And I think there's a whole City of London, Wall Street, huge investment banks and huge firms that employ tens and tens of thousands of people to try and pick shares to beat the market. And over a long period of time, they don't. And I think if you're wanting to, achieve financial independence or get some financial security, unless you are an absolute genius, stock market genius with the time to really research, I don't think having all your money in individual shares is a good idea. Um, that's my 5 minute story of my life in investing, but that's kind of the conclusion I've come to with my own personal finances. And I'm somebody that I know how to read balance sheets. I get how companies are valued, and I still have a very small proportion of my investment money in them. Yeah, I'd be keen to hear your your thoughts on that, Alex.
It sounds like you do a little bit of experimenting in with it. So, I mean, I don't know anything honestly about balance sheets, reading company statements, or anything like that. That's 100% more your bag than mine, and it just makes me think if you can't do it with that extra knowledge, then what outside chance apart from luck am I going to have in doing it? And I wonder if some people get sucked in because they get lucky for the first couple of goes that they do it and they think it's easy and the amounts go up and then eventually I would say that luck will run out. And I just think from the way my brain thinks about stuff, I think about how likely things are, and I've seen a lot of people go through similar things. Where I work in the addiction field, I work with sometimes some people who are addicted or dependent on gambling as well. And it's the potential for reward that keeps people spinning the wheels or making these trades. And you're seeking that first rush of happy chemicals, the combo of serotonin and dopamine that you would get because you've pulled something off and it makes you feel good about it for a period of time, and you're just chasing that high each time you do it, and that's where you see things start to unravel for people. And I know I can't do it. I believe in my heart and my soul that I can't do that. I don't want to give it the time. I'd much rather spend a day kayaking down a river in the sunshine than I would be sitting indoors reading company statements. I think I'd probably fall asleep if I started reading company statements all day. And I don't want to devote the time to it. I really don't. And I've got no inclination to start guessing at what companies go up and down. I mean, Alex, as you say, there are hundreds of thousands of people across the world that are far better at that than me, have the time to do it, get paid to do it. And you mentioned before the bet that Warren Buffett made with the hedge fund kind of proponents that, and they can't do it. So I don't feel like it's a good return on heartbeats that we've mentioned before. I really don't think I think I could do a lot better in terms of my return on heartbeats than sitting and getting bogged down in financial statements. Do you find, Alex, that it gives you enough enjoyment out of it to experiment and try these things? I guess you learn from each time, and I wonder whether do you think it will always form a small part of your portfolio? And when we say portfolio, we mean the majority of the investing that you do, and satellites mean just a very small proportion of your wider portfolio. Usually, less than 5% is allocated to things like picking stocks, might be allocated to crypto, something like that, or I don't know, investing in your pal's coffee business somewhere.
Yeah, I think it will. I get quite a lot of enjoyment out of doing it, and it is that I like to, research it, and I have like I research very specific methods, and I just know it is that experimentation and I guess the curiosity around it. I'm not doing it to have, mind-blowing returns and expect to be, sell my, invest £100 and then a year later I can sell it and buy a Ferrari and a mansion. Like it's definitely nothing like that. It is more there are investing geniuses out there. I like to research how they do it and then try and implement it myself, knowing full well that they have, ultimately so much more resources than I do. But I enjoy it. I like to, research it, and I think it will always be part of that satellite. And I think I always will run that type of, you know, satellite and core element to my portfolio. That works well. I wouldn't feel comfortable having worked so hard to build up kind of the ISAs and the retirement savings to then almost trade out of it all from indexing and invest in individual companies. Um, so yeah, for me, it's a nice balance and it suits my risk tolerance. And I think, yeah, I mean, just going back to that bet, I think it was really interesting. But yeah, just for the for the readers, it was a 10-year bet that Warren Buffett placed with some hedge fund managers that they couldn't beat the S&P 500 index after their fees. So like a net of all fees, they wouldn't beat the S&P 500 over a 10-year period. And yeah, I think over that time it was like 85% return for the S&P, and the hedge funds averaged about 22. And yeah, that was, I think it was $1 million bet, and whoever lost had to give the money to charity. So, these are um, some of them probably the brightest minds in the business can't beat a simple tracker. So, you know, similar to you, I'll play the odds and but at the same time gives me that enjoyment. And I think one thing as well, it does help to when you start having investments in individual companies as well. What I like to get from it is you feel like a real owner of the business. You get the updates from you get the annual report sent to you, you get invited to the AGMs, you're on notifications where there's, directors, you can vote for directors. So it's, and I don't have enough in a company to control the board. Definitely not, but it just, I think, brings it back to you're investing ultimately in businesses. And index investing, you're still investing in business. And underneath all of the kind of the share, the ticker tape of all the prices, there is a company there with employees working in it. They're producing products and goods and services, and you're still investing in a business. And I think being an individual shareholder, you get some of that. You get your dividends, you get the notification of them, you get the letters for the AGM, can read the chairman's statement and you understand what they're talking about. So it brings you a bit closer to being a business owner, and that's, I think, very valuable. Myself, I work in the company as well, so it's quite nice to be, you're on the other side as an investor in a company. It brings it back to you're not just trading prices on a screen. There is an entity that sits underneath that. So I think it's valuable from that regard. I think for me, and I think it's advisable for everybody to not have all of their money in individual companies. Is my Yeah, has been my conclusion over many years of dabbling in and out and doing that.
Yeah, I mean, no surprises here, but I would agree, obviously, with that. Due to not trying it myself, but seeing other people attempt to do it and fail, obviously widely reading about in investing on both fronts, and I think it's very easy to get stuck in an echo chamber of everyone says indexing is great, blah blah blah, but you need to actively do the research into what is it true, because like fundamentally science is the search for truth, and what's repeatable becomes truth. So is it consistent that index funds will outperform active? Is it short term? Is it long term? And everything I've read so far suggests it's long term. If you are listening to this and you think we're talking absolute um, tosh, I guess, tell us, email us, send us the research that you've done. Um, Tell us the secret source if you have it, perhaps, and we'll see if any of that gets shared. I think it's just worth doing as much research as you can and not being sold a dream by someone who actually isn't doing that. Their product is you, and it's you being sold the dream of that. And I think that's what we see a lot of traders on social media. They have the car, they park outside the house, or they're sitting in the plane or something like that. Probably don't own any of those things, but they just make you believe that they do, and you can replicate that level of wealth. When what you actually want is admiration and respect from your peers, I guess. And those are words stolen from Morgan Housel. They're not my own. Alex, while you were talking, I was just thinking about whether you've read or listened to the book called Flash Boys by Michael Lewis.
No, I haven't actually. It sounds good though.
Well, it's great. It's great, and it's basically about the running of a fiber optic cable across a humongous distance in America. I want to say it's coast to coast, and the idea is to be able to send data as fast as humanly possible around the stock exchanges. I might have butchered that a little bit, but that's the general premise. And it's talking of digging thousands of miles worth. It's buying buildings to put this cable underneath, and the amount of bends it has in it reduces the speed in which they can transmit data by fractions of a second. But apparently, it all counts, and it's just I found it absolutely fascinating, and it always pops into my head. So if you haven't read it, I think it's worth kind of reading or listening to the lengths that people will go to make money at that point. And I remember one part of it, this lady who owned a little shop refused to sell her car park or something because it was going to get the cable was going to go through it, and they took months of negotiating because they didn't want to add two extra bends into this cable to get it to go around the car park. So yeah, if you've not read it, add it to your probably already long list of books.
Yeah, it's on the list, and every time I we do one of these, I always get good book recommendations from you. So yeah, I'll definitely it's on the list.
Good, I'm glad. And talking of books, I still have a couple of the books left that I mentioned in episode 4, I think, about having books. So if you want to have a quick look back at that one, if you want any of the books that are there, just send Alex and I an email and I will post you one of those books. I've already sent one of them out, and so I've got 4 remaining. So yeah, if you want a book for free, let me know and I'll wing it to you. Alex, in terms of just generally kind of stock picking investing. I've always seen it, and I've read it before, and it's an analogy that I really like. That there are thousands of companies across the world, and certainly in the UK, the US, etc., all over. And what outperformance is trying to do is pick that handful of companies that will 10x, 100x, 1000x, because the upside is unlimited, and it's finding those very few companies. It's all well and good finding them in hindsight, but it's too late. They're already up there. I mean, look at the rise of, say, Tesla, for example. Nobody buys it when it's a tiny little company working out of a small warehouse, but everybody wants in when it's global space exploration, electric car type thing. And by that time, the growth has already happened. So it's like trying to find a needle in a haystack. And I always feel like at that point, I don't want to spend the time doing the work to sift through all of the hay to find a needle. Probably going to make myself bleed at some point. I would rather buy the entire haystack and keep the whole haystack because I know the good bits are in there, and that is what an index fund does. And long term, someone in this analogy, a farmer, will come along, take out some of the bad hay and add new. And that's what an index is. It's a self-cleansing thing, and it will continue to work for you. And as we've seen, it produces good returns over time. It's the only problem with it is it's not going to happen overnight. And that's what our brains love: shortcuts. They love not doing the work. I mean, if you have an example of, say, the medical model currently, if someone wants to reverse something like type 2 diabetes, they're much less likely to sort out their sleep, diet, and exercise. They're much more likely to continue their lifestyle as they are, but add a medicine every morning. And that's not solving the problem, that's managing symptoms. So it's just a simple thing, but human brains do that. We have to be aware of it, and we have to try and combat that where we can. But brains will always take the easy route because it uses less energy, and the brain will keep as much energy as it can to keep you alive. Its only purpose is to keep you alive. It's not bothered by really anything else, and that's why we have the brain's responses that we do. So apart from that segue, Alex, into a little bit of science, is there any other thoughts you have about index or active? Is indexing, do you think, going to be the majority of your portfolio for the long term until you start drawing down?
Yeah, and a great description of needle in the haystack and the haystack, because I think that sums it up really well. And yeah, indexing for me, I don't see why it wouldn't be the vast majority of my portfolio, yeah, until I start drawing down and needing it. I think that the self-cleansing thing is really, is really important. Like the if you were to look at what constituted the S&P or the FTSE 100, 50 years ago, there's probably only a handful of companies that are still around. And, by just buying the whole haystack, you know that you're going to benefit from the new entrants. And the average return, if you can, you know, just keep investing steady, no matter whether the market's up, down, or in between, and just do that over a long period of time, you'll do perfectly well. And the returns will be better than saving it in a bank account. And it's just about that discipline. But yeah, and for me, index investing is definitely the core of my portfolio for the foreseeable, and probably till I depart on the other side. So yeah. How about you? I assume it's a really good assessment of when you were talking about not wanting to delve into active, looking at shares, that you would, the fact that you know yourself that well and you're not trying to chase things, I think is really important. And that's sometimes, that it wouldn't interest you. And why would you try and do it when you can just buy the whole thing? And it's that chasing short-term returns, thinking there's a shortcut. Um, yeah, and if that's our natural state, then um, you can see why people do get wrapped up in these things. And it was that, yeah, potential for returns is the other thing. And, there's so much marketing and so many adverts about get rich quick. But I think we all know there's no such thing. And you've just got to, it's the discipline and the behavioral aspect that's going to make you well off. And indexing is the best way to do it, in my view.
Yeah, I'd agree. And I think just a good example of that self cleansing nature is if you ask anyone who's probably less than 25, maybe less than 30 today, what to name one of the most valuable companies of like the, I don't know, the 80s, 70s, 80s, and 90s would have probably been at points General Electric. You don't see it now. It's certainly not in any of the major kind of funds. The top currently stuff will be tech. I wonder whether at some point that those eventually they will drop off. And your grandkids might not have ever heard of Apple or Microsoft or Google, and it'll be some other new company that comes in. And that is just the ebb and flow of life. It just happens to be much longer than the lifespan that we have on the planet. And I think that's another thing that people struggle with. And it might be worth, Alex, an episode on uh, investing over time. And when I say time, I mean like generations, hundreds of years. Um, because the way I certainly think about it now, or I have come to think about it, is not only my own life, but how can I impact the life of all the descendants that come before me, or not before me, sorry, after me. And imagine you set up an index tracker, and you after you before you obviously you pass on, you put it in trust, and its primary job is to fund education for your grandkids and their grandkids and their grandkids, because it will always go up, and it'll always be more and more expensive. And imagine not coming out of university without any student debt, not having any tie or anything like that, because your great 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 granddad Alex set this thing up, and it's being monitored by a legal firm indefinitely, and you're able to take advantage of that. I mean, that's something that I feel like that's a huge legacy that you can leave, and it's something that I 100% want to do. And one other point on kind of indexing, I pick it because it's the lazy option. I don't have to focus on all those things. I can get on with life, which is the most important part, is living a good and happy life. And indexing allows me to do that, and eventually it will provide me an income without me having to work. And that is why I do it, for my own life, to benefit me, but also to benefit every direct descendant I have. Have you ever thought about it in terms of multi generations, or not?
I haven't, to be honest, and it's partly because, I mean, children for me and my partner are not in the plan, but I think certainly leaving something to wider society, whether that's charitable foundations or to having something at the end to be able to, um, yeah, continue to provide some residual benefit I think it is on my mind. I haven't thought about it in much detail.
How about a library?
Oh yeah, a finance library.
A library, you can put whatever books in it you like, but it could
Yes.
be just, I don't know, Alex's finance library, or just giving an education in finances for free to whoever may need it. And I'm hoping that's something that we can turn this podcast into is just an education for people, or not even an education because we're not teachers, but just some thoughts around it, learn from our mistakes, and this is what worked for us, and to think about it long term. Um, do you have any other thoughts before we wrap this?
No, I think we've covered that. I think there's been a good discussion, and yeah, I'd be keen to hear any feedback and yeah, let us know your thoughts on it on your email. That would be great.
Yeah, it would. And thank you for listening. So that's the last 33 minutes of your life you won't get back. Hopefully, you've enjoyed it because you've listened to two Alexes remotely talk about index or active. And at one point, Alex, I do have a friend of mine who does work as a trader. So I'm going to bring him as well. And just to get the full picture, the other side of the coin. The only problem is he lives in Mexico, so that'll take some planning on my part. But I want to cover all bases. So to get you've heard our side of it, I'd want to hear someone who does actively trade for a living. He makes his livelihood out of this. So I'd want to see both sides of the coin, as it were.
Well, that'd be brilliant. And I think yeah, providing that balance, um, yeah, would be an exciting debate, I think.
Perfectly balanced as everything should be. So yeah, thank you guys for listening. So enjoy your week. Take care of yourself, and if you can, someone else as well. And just be kind where you can. None of what we discuss on the show is to be considered financial or health advice, and we recommend you always do your own research or consult an independent financial advisor or a doctor when making your financial or health decisions.